Anand Rathi presents Power of Vision, Stories of Wealth Creators in association with CNBC TV18.
The real estate regulation is a very big change which has still not played out in the sector, RERA, which we call it in India. That will have long-term repercussions, and the lesser cash in the economy, which is very evident, not optically to an outsider, but if you look at interacting with several thousand HNIs, you realize the kind of cash generation has reduced dramatically after GST and D-bond. I personally think these four have a large long-term impact on real estate, especially residential real estate in metros. And commercial real estate always has a dent in a higher interest rate economy because people and corporates don't want to consume real estate. They would rather rent it out than block their balance sheet capital. So that's the real estate opinion. I personally think that if you mathematically evaluate all the 6 vehicles you can participate in Indian equity, you can participate in Indian equity using 6 different vehicles: mutual funds, PMSs, direct stocks, NPS, and insurance-based investments. The most mathematically arrived at risk return reward is towards mutual fund. There are 380 active funds, like I told you. The best one last year gave 40% more than the worst one. So if somebody has a binocular lens to choose those 10, 15, 20, which will be forming a part of your portfolio, that's why we have deployed out of our 83 research member team, 18 people only do this for a living, to choose those 15, 14, which will be the ones which will beat Nifty by about 2-3% a year.
Oh, just to add what you said, one more factor between the other asset classes is the liquidity. I think both real estate and startups are illiquid investments, and therefore, obviously, we always recommend that your management philosophy, wealth management should be uncomplicated. It should be simple, and it should give the liquidity whenever you need it. In real estate, yes, if you have some interest, direct interest in the industry which you are in, and you know the people and get involved to make it successful, it could give you great things. Otherwise, of course, a passive investment, because all of us, I believe that all of you are obviously engaged in your own profession or business or whatever. And therefore, any strategy which is more passive, which doesn't require to look at it on day-to-day basis, and it still gives the reasonable return, which you call it 12 to 14%. If that sort of return one can make it in India, to my mind, that should be the best strategy.
Anand Rathi presents Power of Vision, Stories of Wealth Creators in association with CNBC TV18.